What's up, folks? Welcome to another episode of Smoke World. I'm your host, Stone. So go grab that stick, go grab a glass, whatever you're drinking. Let's sit back and have a conversation. You can follow me on Instagram at SmokeWorld50. And I tell you this every time, folks, send those emails into SmokeWorld50@gmail.com. Today's guest is my brother, the Leaf, Rags. Now, this conversation might not be the most exciting conversation, but it's a needed conversation. Today, we're talking about life insurance. That's correct. Something that you need when you pass away, and then you leave your loved ones with the GoFundMe page. We're not doing that. Brother Rags is in the building. Brother Rags, what's up, brother? What's going on with you, man?
Hey, how you doing, good brother?
Oh, man, chilling, brother. We're going to discuss an important, at least I think it's important, the fact that so many of us don't have what we need when we pass away. Life insurance. We're going to get down with that. Before we get into all that, brother, I want you to give them a little breakdown. Tell folks where you from, what you smoking on over there.
Okay, well, name is Rags, originally from streets in North Philadelphia. Grew up in public housing. Long time coming.
Hey, baby, North Side.
Yeah. Got away from that some years ago, and now I'm here. We started from the bottom, and now we're here. Got a little Alpha Wente over here. Good smoke, nice, clean, smooth, not too harsh. Perfect for this time right now.
Oh, that's what's up, brother. All right, so, again, from my intro, life insurance. I kind of find, I might be speculating here, but it seems like the black and brown community, I don't know, they need education, but it appears to me that we're lacking in how serious life insurance can be. Maybe you can expand on that. I mean, what's your experience with that?
Well, what we find is that in our community, and it's largely cultural. I'm certainly not here to speak against our Caucasian brothers or Chinese, Asian brothers or anything like that. But what I've found in my 11 years in this business is that in the black and brown community, the emphasis on financial literacy, the emphasis on legacy building is just something that's taken a back burner. It's taken a back burner to marketing, the popularity, to Fendi, to Maserati, to Gucci, things of that nature. And not enough emphasis has been paid on making sure that my family and my loved ones are set up in the event of an untimely death.
Okay, that's very true. I like how you went into the, stereotypical. A lot of times we, in our culture, we have these videos, we balling in these certain cars, but we're not investing the money. We're not thinking the next level. Okay, going into that. Now, what type of insurances are there out there? We have life insurance. I know right off the top of my head, I have a question in reference to burial insurance. Is that different from life insurance? Because is there a separate policy for that, or that's all underneath life insurance?
Well, Stone, it varies.
Okay.
A part of a well thought out life insurance policy, or the beginnings of a financial plan, which is going to be your life insurance. It entails a few things. One is final expenses, which is going to be the actual burial of an individual. In addition to that, you have your income that's needed, right? You have your survivor needs. Those individuals that are left behind have needs. You have estates that need to be addressed and taken care of. So your life insurance policy should be a holistic plan to encompass all of that.
Gotcha. Okay, so that's the reason why I guess it's important to know salary, debt, because again, that would be conducive to you getting the correct life insurance policy as far as the amount to cover in the fact, in a timely death of a loved one.
Absolutely.
Okay.
What we find, one of the most common questions that we find, and I guess fortunately, unfortunately, education, has a lot to do with how important the life insurance conversation is. What we find is that oftentimes individuals think about life insurance and they only think in terms of, if I die, someone will have enough money to bury me. A very myopic view of the situation, because the full picture, I'll take myself for example. If I were to expire now, my wife would be left with the mortgage, right? We have a $600,000 home, and she would be on the hook for that. In addition, there are the children, right, who are ultimately survivors. My children are grown. However, an individual, let's say my children were younger, there are child care expenses. There's the need to buy Bobby sneakers and clothes for school. At some point, the children will go off to college, maybe. There's that expense, which if we can pay for that with someone else's money, why not? It's just the way to go. And what we find is that our counterparts, those individuals of other ethnicities, they plan, right? They plan for the what if. And far too often, we don't. And what that leads to, in many instances, is if an individual has some coverage, sure, the burial is paid for. And then what? I'm looking on Facebook constantly, and I find a lot of individuals that are leaving here due to this pandemic, this COVID, and they're young folks, 44, 38, and unfortunately, at those ages, oftentimes we don't properly plan. So they leave, and they're leaving children, 10 years old, 7 years old, 17 years old, and they're leaving a spouse or significant other left holding a bag for these kids, and it's just a travesty.
I'm glad you mentioned COVID. That brings me a good segue. Now, with the pandemic going on as it is, if an individual contracts COVID who requires hospitalization, would that make it more difficult for them to get life insurance? Would that premium be much higher? Is that one of the things that they look at? I know they do have certain criteria, pre-existing conditions, cancers, diabetes, high blood pressure. Now, is COVID now one of those triggers to increase premiums?
Well, life insurance is one of those items that's based on your health, your age, and your gender. Those are the drivers. Those are the things that drive the cost of insurance for an individual. COVID is not unlike, or at least with many of the carriers that I'm associated with, COVID is not unlike any other disease. For many carriers, if you deal with AAA rated, AA rated carriers, I'm talking about reputable insurance companies. There's a lot out there. There are thousands of insurance companies. But if you deal with a reputable company and you go through the underwriting process on the front end, most carriers will not cover you if you are sick, if you're in the hospital right now, if you were recently sick, if you got out of the hospital last week, things like that. Most carriers want to wait a little while to make sure that you are healthy. It's all about risk and who's willing to take on your given risk, which in this instance is this disease that we don't know much about because it's new.
Okay, because I know personally, my wife's family member was in the hospital, and didn't have any life insurance. Now I see those commercials that say, "Hey, no medical background checks are needed. You pay whatever X amount a month." Now, what's the deal with that? Is that real, or I'm not saying they scams, but I mean, what's the background? Because we see those commercials all day. I don't know if it's Colonial, somebody, not to put them out there, but that's just who I recall seeing on the commercial saying, "Hey, there's no medical examination required to pay $9.99 a month." What's the stipulation with that? What can you give us behind the scenes on that? Is that real?
Well, I mean, yes and no. So, I mean,
Yes and no. This is good, folks. Listen up.
You don't get something for nothing, right?
It's like you're talking from the streets now. Hold on, bro.
If many people, if a person tells you something that's too good to be true, just absolutely too good, then usually there's a good chance that it in fact is too good to be true, and individuals always want to sell, right? Now you have what's called graded, GRADED, graded life insurance policies. Those policies are guaranteed issue, so yes, you are guaranteed to be approved for those policies. Two caveats. The first caveat is you have to be of a certain age. Now, I know there's one carrier that begins at age 45. So a 40-year-old wouldn't qualify for a graded policy, the guaranteed issue. I have other company that I deal with where the minimum age is 50 years attained. So you have to be at minimum 50 years old. Now, these policies are just as they are advertised. They are guaranteed. They tend to be more expensive because there's no underwriting. We're taking on these risks, no questions asked. The other thing is that these policies tend to have a small death benefit. They're known as final expense policies, burial policies. These are policies for individuals that have, stage 4 cancer, HIV, leukemia, paralysis. These are those problems, those health issues that I just spoke to are all things that would have most individuals from most insurance companies decline. With a graded policy, you are able to get covered. Coverage may range from $5,000 to $30,000. Again, it's a final expense policy, so the intent is not for you to take care of your survivors and income replacement, things like that. The intent for those policies is to assure that your loved ones don't bear the burden of paying for a funeral. So you have taken the proactive steps of taking care of that for them.
Now, with that being the case.
One second.
Yes, sir.
The other part with graded policies is that graded policies tend to not pay the death benefit until after 2 years.
Okay.
Right? So you buy the policy right now.
That was going to be the question.
You buy the policy right now. You get approved next week. Got your policy. It's in force. You pass away 6 months from now. What most carriers will do is they will refund the payor 100 and some % of the premiums paid. So if I spent $100 a month and I passed away in 6 months, maybe they give me $725 instead of the $600 that I paid. So you won't lose money, but that $20,000 death benefit that I thought I was buying, you have to wait 2 years for that. Hence the word graded. That's built into the plan.
Okay, that was going to be the question. Let's fast forward that with an healthy individual. You sign up with a health plan, a life insurance, and you got X amount of dollars. Is there a waiting period for that individual? God forbid they pass away prior, and they're healthy prior to that 2 year waiting period. Is there a waiting period with those?
Well, for all of my carriers, I can't speak for all insurance companies, right? I am affiliated with, I guess, about 10 or 11. And all of our carriers provided that the policy is paid for. So you can take an application now, and I can take an application now and not take money and wait until the underwriting process has been completed and you're approved. If we do that and I don't take your money, you're not insured until after your first payment is made. Me personally, I don't do that. When I take an application, I take money with the application. I do it for a number of reasons. One, it shows that an individual is serious about the process that we're going through. Everybody has to have a little skin in the game, right? I don't want to sit down and go over a plan with an individual and come up with all of these wonderful solutions, only to have them 6 weeks later, when it's finally approved, decide, you know what, let's wait. And, so me, I take cash with the application. Whenever you take cash with an application, the prospective insured, the applicant, is conditionally insured for 90, 120 days. So if I take an application for any of you under the sound of my voice, and you go out the next day and get hit by a bus, your beneficiaries will be paid
at face value.
The full death benefit.
Oh, okay. So that's the question. Okay, that's a very good question. All right, my next question, brother. We hear these terms, whole life or term. What is whole life?
Well, that's a solid question. So the easiest way to explain it is let's start with term. There are many variations of insurance, right? Right now, we'll keep the conversation to term and whole life. Additionally, you have variable whole life. You have indexed universal life. I mean, you have variable universal life, indexed universal life. You have all these different types of policies. There is no bad policy, right? Nothing is bad unless you have something to compare it to. All right?
Okay.
Term policies is synonymous with, in our business, in my shop, we call that renting insurance, similar to renting an apartment. So for a term policy, the policy will have a level death benefit. So if you bought $500,000 in insurance for a 10-year, 20-year, 30-year term, that policy is going to stay $500,000 for the 10, 20, or 30 years. Another characteristic of term policies is that the death benefit, it stays level for the term. After the term, the price is going, not may, it's going to increase, right? So you have 1 year. I have 1 year convertible term policies. I could do 10 years. I could do 20, what have you. At the end of the term, the policy premium is going to go up. The other thing about term policies is that they are only, how should I say, they are guaranteed for, as I just stated, the length of the term, kind of like renting an apartment. You lease an apartment for a year. During the course of that year, your rent's not going to go up. If you decide at the end of the year, hey, I want to stay another year, usually the landlord, or oftentimes the landlord, will say it's okay for you to stay, but you have this 5%, $50, $100 increase in your rental fee. That's the same way that the term policy works. People purchase term because it's cheap. It gives you the most bang for your buck immediately. This is not an individual that's planning, that wants all of the amenities that purchasing a whole life policy will afford you. So we get the largest amount of money, the $500,000 payout, for the least amount of cost. Right? Now, the caveat is that at the end of the term, you walk away from the insurance company. The insurance company walks away from you. No harm, no foul. The policy has served its purpose.
Okay, now whole life.
Now, the flip side. The
Yeah.
flip side of that is the whole life policy. Whole life policies are like purchasing a home. We call that buying your insurance. A whole life insurance policy is an asset. A whole life insurance policy builds cash value similar to the way your home builds equity. So over time, the amount of value that you have in the policy increases. That increase is available to you tax-free, which is another wonderful thing about life insurance. The money that's paid out through life insurance, by and large, now not in all situations,
Whoa.
and I don't want to get into the minutia, right? But not in all situations, but by and large, the monies within your insurance policy can be paid out to the owner tax-free. Life insurance benefits that are paid out to a beneficiary upon someone's death is received tax-free. That's federal law. That's not a rags statement. That's insurance law.
Gotcha.
So no matter what company you go with, you have that. The other thing about whole life policies is that the premium for whole life, the premium stays level, and it'll stay level forever. Now you have different types of whole life policies. I don't want to get in again. I don't want to get too much into the weeds, but you have some policies that can be paid off in a certain amount of time. So let's say a 10 pay. You have a life insurance policy that can be paid off in 10 years. After 10 years, now let's assume you're 30 years old. So at 40 years old, you're done paying for it, and that policy is going to remain in force, is going to continue to grow and build cash value, equity, and the death benefit. You started out with $100,000. That death benefit will continue to increase. So by age 70, your $100,000 policy may be $300,000. You may have $150,000 in cash value in it, and you haven't paid on the policy, in this example, in 30 years.
Okay. Now, speaking of whole life, do you think it would be a good investment for parents to maybe get whole life on their children? Because my understanding is something that you can borrow from. What's your opinion on that scenario?
Yeah, so I coincidentally, I sell a lot of children's whole life policies. I'm a very, very, very strong advocate for children having their own life insurance policy. Many agents, if the consumer can afford it, many agents sell life insurance policies, and they add the children as what's known as a rider. So I have a policy for $100,000, and I have my two sons, and I'll insure my two sons for $20,000, and it may cost me, depend on the company, don't quote me, but it may cost me $8 a month to do that. For the uninformed, all of you are being informed now, right? You know better, you all do better. To the uninformed, that seems like a great deal. I'm insuring my two kids. It's only costing me $8 a month. What happens is the children eventually age out of the rider. So the children's rider is just that. It's a children's rider. So the children's rider is not good for you at age 30, at age 25. All companies are different. Most companies, the children age out at around 23, 21. You know, when they become adults, they age out of the rider. The reason why I'm against the rider is because during that time, between when Bobby was 5 years old and when Bobby turned, in this example, let's say 23, during that time, Bobby may have developed a drug habit. He may have developed diabetes. He may have gotten hit by a car. Now he's a paraplegic. Life happens.
Yes.
Right? In short, life happens. Now, if life has happened to Bobby and now he is 23 and aging out of the rider, what do we do with Bobby? We can't provide insurance for him. So my alternative to that is to get Bobby at 5 years old his own life insurance policy. The policy will be underwritten for him at age 5. It's going to be much cheaper at age 5 than it would cost at age 23. And now, no matter what happens to Bobby, if he gets a crazy criminal record, if he unfortunately gets caught up in drugs, right? If he has a crazy driving record and he's a speed demon, if he gets DUIs, none of that will matter. None of that will matter because he already has a policy in force. That policy will be good for the rest of his life, and you had it when he was 5 years old.
Gotcha. Now, speaking of children again, a lot of employers have those insurance policies where you pay the 50 cent, $1 per pay for your children. You know, a lot of times I don't know if we're educated enough, and that's anybody, because a lot of times we don't read that stuff. Let's keep it real, folks. It sounds good. You didn't really do an in-depth investigation to find out exactly. You pay this $1 every pay, and they're going to pay you $10,000 in case of a death. What's your opinion on those type of policies? Is that something similar to that, or they can do that because again, there's so many people, and they can get this cheap rate as an employer?
So, group policies are a great benefit, right, for the employer. You know, when as an employer, you want to provide benefits to entice individuals to come and work for you. Life insurance, short-term disability, long-term care. These are all benefits that employers are able to provide their employees. It's a great, great addition. It's a great supplement to your own life insurance. Group insurance tends to, most of the time, sometimes it's portable, but most of the times it's not portable. And what we find is that when it is portable, usually the premiums kind of go through the roof once you separate from the employer. So group policies are very cheap, and they're very cheap because, you know, the insurance company, let's be honest, the insurance companies are banking that these 100 employees, you may have one death or whatever, but by and large, these policies are not going to pay out, right? A person's going to come to work for you. They're going to work for 2 years, 5 years, 10 years, whatever, and then they're going to separate from the employer. Once they separate, they no longer have the insurance. So for that cause, because there are not an overwhelming amount of death claims, people dying, the cost is really, 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 really low. I'm certainly not against group insurance policies. I sell them. I deal with employers. And I think, again, that it's a great benefit for the employer to provide to his staff. However, the employees have to have the wherewithal and the foresight to know that this is not their end-all, be-all. They have to know that they don't want to get caught up in what I call the okie doke, right? You work for an employer, you start working for an employer now. I see this all the time. You have individuals that might work for the city or work for federal government, whomever, and they start working at 23, 25 years old, and now they're 55 years old, right? So they don't work for this employer for 30 years. During that 30 years, they had insurance the whole time. Never enough, right? Because the employer is only going to provide usually your salary, maybe 1.5 times your salary, something like that. Never enough, but they have had this coverage during that full 30-year period. The problem is, which I run into all the time, is that now you are 55 years old, and now you have high blood pressure. You have breast cancer. You know, your prostate's not acting right. All of those different issues associated just with life, just with aging. Not that you've done anything wrong, right? Due to nothing that you did but live. Now you're 55 years old, and where you could have been paying $50, $20 a month for something, now it's costing you $300 a month, and you're ill prepared to pay for it. if you're able to be insured, right? Within that time from when you started work and when you separate from the job, life could happen and you become uninsurable. How often are people diagnosed with some form of cancer? How often are people diagnosed with any number of illnesses, and that's just sickness? What happens to the individual that gets hit again by a car or gets shot in one of these inner city streets, and now they're in a way where they're uninsurable? All that they will qualify for at that point would be a final expense policy, which, as we said previously, will give you $15,000, $10,000, $20,000, but certainly not enough to help your loved one take care of his mortgage, not enough to help take care of these children, certainly not enough to leave a legacy for your grandbabies. All of the things that you wanted to do, that you wish you could do if you could start over. Unfortunately, life doesn't work that way, and we're unable to start over.
Speaking of starting over, and I'm going to go back to the pandemic. Last year, we had the pandemic. A lot of folks lost their jobs, can't pay their bills. Now, is there any leniency with insurance companies in reference to, okay, you lapse your payment? Is there any forgiveness? You know, obviously, the pandemic is a prime example where you pay $250 a month. Unfortunately, then you lost your job, and now you're unable to pay that particular premium for that month. So I guess it's going to be would it vary from company to company, or what's been your experience with that, with real life?
Yeah, absolutely. So, hey man, you asking great questions. So some companies, one company in particular that I'm affiliated with, what they did was they didn't forgive the premium payment, but they deferred it. So this company allowed for individuals to not make their payments for 90 days, 120 days, and they set up arrangements for the individual to kind of catch up later. That was a great benefit to many individuals, because some people actually died during that time where they were not making payments. And again, the company was obligated to pay those death benefits, even though the individual had a policy that would otherwise had lapsed. So that's one way that is dealt with. Another way that is dealt with is, as we spoke to the whole life term conversation, permanent insurance. As you build cash value in that policy, the policy has the ability to utilize that cash value to pay those premiums. So if you have a policy and you have $10,000, $15,000 in cash value built up in it, in equity, built up in the policy, and you for some reason are unable to make your payments, the cash value will decrease by the amount of your payment, thereby allowing you to maintain the coverage even though you're not paying for it at that particular time. That's one of the upsides of making that permanent purchase versus the temporary purchase, of buying your insurance versus renting your insurance.
And like I said, just to piggyback off of that just a little bit, obviously whole life sounds like the way to go. But I think, man, you had this conversation when I came to you about people live monthly. And obviously whole life is more expensive. But like I said, it's a long term. So based on your age, so the objective and the message for me from this conversation would be, young folks, grab insurance now while you're young. Because again, like you said, life happens. As we get older, different elements kick in. So obviously, just like you said, age, gender,
and
sex makes the difference. So the younger you are, obviously you get a better rate. And you can lock yourself into those whole life. Now, okay, speaking of that, now does the whole life, I'm 21, I get a whole life. Does my premium change as I get older? Or that kind of stays, am I locked in like a mortgage? Well, mortgages change every goddamn year. Let's not even go. Let's not use that for example. We don't want to go there, folks. between the school taxes and property. We won't go there. But I'm 21. I buy myself a whole life. Does that premium remain the same forever?
So, generally speaking, yes, the premium will stay level. Now, again, I don't want to confuse the people by speaking to too many different types of insurance. But there are insurances where the premium is flexible, right? The premium can decrease or increase based on your desire. So the insurance company isn't going to just say, okay, you were paying $50 a month, now you got to pay $75. But there are plans, I actually own one for one of my sons, where you may start out paying $50 a month and decide, you know what, I want this to grow a little faster, so now I'm going to pay $150 a month. And now I'm unemployed, I'm going through a little rough time, so now I'm going to pay no dollars a month, right? And then once I get back on my feet, let's pay $75 a month. So we can make the premium, we can juggle the premium a little bit with certain policies. Then that's not all permanent policies, but there are policies out there like that. A regular standard whole life policy, you're 21 years old, you make your premium, you get a premium of $38 for 50,000, whatever. That premium will stay the same until age 100.
Gotcha. I'm just going to put a tidbit in here just based on my personal experience. Speaking of employers, folks, this is something you might need to investigate. If you do have insurance through your employer, you need to get that information and make sure your loved ones have that information, because at the end of the day, I started a job. I never received anything in reference to what this insurance policy number was or what the coverage exactly was. Only I knew that. And that's not where you want to be, because now it's on a trust factor that you're hoping and praying that the employer notifies your next of kin that you had this insurance. And I don't think folks want to be in that situation. So if you have the employer's insurance, it would be my recommendation that you go contact your HR, because, again, the policy is not in your name. It's in the employer's name. But there is a policy number associated with that. So get that policy number, that amount that you're paying for, and make sure you get it to your loved one so they can put it away. And God forbid something happens to you, that they will be able to claim those benefits that you've been paying for, because they don't give you anything voluntarily. That's not something they say, okay, here's your package, here's your orientation package, you're paying for your insurance. That's not the case a lot of times. So remember that, folks. Go check that part out. All right, Brother Rags, like, what else you got for us, man? It seems like, the takeaway from this whole thing is to actually grab this insurance when you're young. But if you're not young, you're like me, getting up there a little bit, a couple gray hairs and popped up in my nose, but we ain't going to tell everybody everything. If all you can do, I guess, is term, that's better than nothing at this moment. So some insurance is better than no insurance.
Again, so, there is no what I'm going to call bad insurance. I personally own permanent contracts, and I own temporary contracts, right? Insurance is all about need. So what an individual wants to do is sit down with an advisor, with someone reputable, with someone who's not just trying to make a commission, with someone who wants to listen and learn who the client is, what the client wants, because oftentimes consumers don't know what they need, right? You have a lot of transactional agents out here that they're hungry. It sells. If I don't sell, I don't pay my mortgage, right? We don't get a paycheck. I don't get paid this week if I don't sell any policies. I don't get anything. So because of that, agents are prone. They're hungry. They're prone to push the unexperienced agents. It's also the reason why there's so much turnover in this business. Everybody can't last, can't hack it. But you get an agent that sits down with you and establishes how much insurance you actually need. Once we get to how much you need, then we talk about what you can afford, right? And once we establish what you can afford, then we talk about which product best meets your need at that price point. It's not a situation where you have to do all or none, right? Average individual earning $50,000 a year, not a lot of money, just $50,000 a year. Depending on how old they are, they may need $1 million, $1.5 million in coverage. Because again, we're replacing that income potentially over someone's lifetime. So if I'm buying this insurance at 33 years old, right, I'm looking for my wife to be okay potentially for the next 20, 30 years. And I'm looking to pay off the mortgage. I'm looking to take care of the kids. If I can't fully pay for college, I want to leave enough money for at least something substantial. Maybe we can knock $50,000 off these student loans, right? Maybe my son, who doesn't want to go to college, he wants to start some type of business. In the African American community, let's talk about it. Getting bank loans and financing is very difficult, right? It's very difficult. So if I'm able to finance through my life insurance proceeds, why not? Why not make sure that these children and my loved ones are able to realize their dreams? That's kind of the mindset that we need to be in. And oftentimes, it's just a matter of foregoing a trip to the hairdresser, right? For young folk, foregoing. Maybe you forego a pair of these Yeezys and these Air Jordans, right? The point is that we can take care of this for not an exorbitant amount of money. The other way to consider this is, because I've had people say it's just too expensive to pay. Well, I would beg to differ, and the question that I ask them is, how expensive is it to not? Right? How expensive is it for the wage earner to no longer be here and you to be stuck trying to fill that void that the wage earner left? How expensive is that? So you could pay a little now and benefit a lot later, or don't pay anything now and find yourself in an unfortunate situation down the road.
Now, speaking of these $1 million policies, bro, do they really pay this $1 million out?
Of course.
Okay, I had to ask that. I know y'all was asking.
So
Y'all had that in your mind.
Yeah.
They got $1 million policy, man.
Hey, listen, man.
Do these jokers really pay the $1 million? When do they pay? Okay, I got another question. Tricks and triggers another question for me. Boom. You pass away. Guess you require your death certificate. Are you paid that money a lump sum, or is this money paid over a certain period of time, or is it based on how the insurance is written?
It's based on the desire of the owner of the policy, right? Now, most policies, just pay in a lump sum. Now, fortunately, knock on wood, I've never had to deliver a policy of $1 million. However, I do have a partner and he made a copy of it. He delivered a check to a family that was $900,000+. We call that the love letter.
Yes.
Right? So when an individual expires, certainly we can't bring them back. But at the end of that process, if they've been proactive and taking care of business, we like to deliver our own love letters to the family. And yeah, $1 million, $2 million. I was actually on a call this afternoon, an advanced planning call, and they were talking about people with $40 million policies. They were talking about individuals that's paying $70,000 a year in premium. Now, again, these aren't everyday average people. These are affluent individuals. But in our shop, you have athletes, right? What type of policy do you give Pat Mahomes, who just signed a $500 million contract? He needs insurance. $1 million is not enough.
Not at all.
Right?
Not at all.
And so you have to consider needs and do a realistic fact find, do a true fact find into what a person needs and their desires and what it is that they're trying to accomplish, because insurance is more than just a final expense. It's a plan for setting things up in the future in the event of someone's untimely death.
All right, cool. As we wrap this up, that the Mahone thing. Now, if you're making $30,000, could you get $1 million policy? Would the insurance company write your $1 million policy?
So,
or do they base that on, your worth? Okay, we say, Mr. Stone, you make $30,000 a year. Now you're looking for $1.5 million policy. Would they write that?
okay, so
I don't want to get too deep in the rabbit hole.
okay, all good, and that's a wonderful question. So, insurance, all insurance, whether it's health insurance, life insurance, long-term care, disability coverage, your mortgage insurance, auto insurance. Insurance is designed to indemnify. It's designed to make someone whole. Your homeowner's insurance, if your house burns down, you can't take $100,000 house and it burns down and they replace it with $1 million mansion. That's not what the insurance is designed to do. Your auto insurance, if you drive a Toyota Camry and you total the car, it's not going to be replaced with a BMW, right?
Damn.
It's designed to make you whole, not for you to profit.
Not to make it come up.
Not for you to profit. So with life insurance, different companies have different underwriting guidelines, but usually 15 to 20 times an individual's salary is allowable. So in your example, an individual makes $30,000, they could purchase up to about $600,000 in coverage. A person that makes $30,000 can't buy $1.5 million, at least not for none of the carriers that I deal with.
Gotcha.
All right.
Gotcha. Well, look, man, you've been giving out a lot of good information. Is there any way folks can get in contact with you? They have a question. They say, look, you know what? I listened to this on Smoke World, and I need some insurance. How can they reach out to the brother and say, yo, my man, I need you?
So I actually dropped my cell phone number. My number is 267-973-7378. That's a cell phone. I'll answer it. My office is always open. Once again, that's 267-973-7378. I love to talk to you.
Well, folks, you heard it here first. We smoking, but we talking real talk. It's important that you have this life insurance because at the end of the day, tomorrow ain't promised, and the times we living in, you may want to check this out and handle this situation. All right, folks, well, listen, we're going to wrap it up. We thank my brother Rags, brother The Leaf, coming through to talk a little life insurance while we puff, sipped on something. Mind your business, don't judge us. Mind your business out there, mind your business. But look, folks, stay tuned. Again, you can follow me on Instagram at SmokeWorld50. Send those emails into SmokeWorld50@gmail.com. Subscribe to the channel. I appreciate y'all listening. Until the next time, stay safe. Peace.
If you're not listening to the Smoke World podcast, you're wasting your time, you mortal.